This example relevant for creditors reconciliation. The creditors control account balance is given 31st March 20, 12 million, and total amount of creditors ledger balance as at 31st March 20. Creditors ledger balance means creditor list balance. Individual creditors account balance equal 13,140. Think if those are recorded correctly, control account balance should be equal creditor list balance. But in this example, creditor control account balance is not equal creditors list balance. It means there may be some errors in the general ledger as well as debt creditors ledger. Therefore, it has given errors. Reason for difference is given. They ask adjusted creditor control accounts and prepare the statement of creditors reconciliation based on adjusted creditor control accounts. That creditors reconciliation. If errors occur in the general ledger, control account available in the general ledger, this is the format: adjusted creditor control accounts and statement of creditors reconciliation. Balance as per adjusted creditor control account. Here closing balance. Adjusted creditor control account closing balance would be included here as opening balance. Then addition, deduction, then answer is a balance as per creditors list. If those are recorded correctly, here answer should be equal creditor list balance. Then if errors occur in the general ledger, should be adjust control accounts. But if errors occur in the creditors ledger, should be included reconciliation statement. As well as if it has given completely omitted or erroneously recorded in the prime window books, those are should be adjust both adjusted control account as well as statement of reconciliation. When some information included in the reconciliation, how to decide add or deduct? See the effect for this balance. If effect for this balance increase, those are should be added. If effect for this balance decrease, those are should be deduct. That is the way you have to decide. Right, first one, take the adjusted control account as a balance. This is a control account balance. Creditor control account balance, closing balance, record values in 1000, 12,000. If those are recorded correctly, here balance should be equal. Here balance should be equal this value. Then first one, total amount of purchase journal was undercasted. Total amount of purchase journal effect for creditor control accounts. Normally purchase account debit, creditor control account should be credit. It has recorded undercasted value. Journal total amount undercasted. Therefore, it is not effect for suspend accounts. Purchase account debit, creditor control account credit. Therefore, here as a purchase. First one. Second one, when balancing credit side of individual creditors accounts, overcasted by 200. Individual creditors account overcasted by 200. Credit side, normally creditor is a liability. Credit side, if credit side increase, balance also increase. Errors occur in the creditors ledger, individual creditors accounts. Therefore, it is effect for reconciliation. Think about when balancing credit side of individual creditors account overcasted. If credit side increase, all the liability accounts, if credit side increase, balance also increase. Therefore, as a result of this error, individual creditors account balance increase. Therefore, creditor list balance also increase. Therefore, creditor list balance increase by 200. Therefore, creditor list balance increase. This balance increase. Therefore, it should be add. If effect for closing balance increase should be add second transaction. Think how to decide add or deduct. Record values in 1000. See the effect for this balance. Individual creditors account credit side overcasted. Therefore, individual creditors account balance increase. Therefore, credit list balance increase. Therefore, this balance increase. Therefore, should be add. Third one, discount receipts amount 600,000 was credited to the creditors control account. Credited as a 60,000. Normally, discount received account credit, creditor control account should be debit. Discount receipt should be recorded debit side, but it has recorded credit side. Incorrect value recorded credit side. Recorded 60,000, but should be debit 600. Should be debit 600, but it has credited 60. Therefore, now should be debit 660. Recorded incorrect side. Therefore, as a suspense. Description suspense. Third one. And fourth one, rupees 400,000 worth of debit note completely omitted. Think about debit note, that is a source document relevant for purchase return. Therefore, purchase return complete omitted. Debit note, that is a source document relevant for purchase return, completely omitted. If it has complete omitted, it should be recorded both adjusted control account as well as statement of reconciliation. Think what this is a purchase return. Complete omitted. Normally purchase return account credit, creditor control account debit. Therefore, that value 400 should be debit as a purchase return. Or return outwards. Transaction number fourth one. And purchase return completely omitted. Therefore, it has not recorded individual creditors account also. It has not recorded individual creditors accounts. Normally, purchase return effect for creditor balance decrease, but it has not recorded. Therefore, effect for individual creditors balance increase. If individual creditors balance increase, list balance also increase. Therefore, closing balance effect for closing balance increase. Therefore, should be add 400 completely omitted purchase return. Effect for creditor decrease, but it has not recorded. Therefore, individual creditors balance increase. Transaction number fourth one. Effect for both. If it has given completely omitted, very important. Then fifth one, cash paid for Amal, rupees 1.2 million, rupees 1.2 million was debited to the Amal account as a 2,100. Think but value is not correct, but debited, that is correct. Cash account credit, creditors account should be debit. Therefore, cash paid for creditors should be debit. It is okay, but value is not correct. Therefore, debited overcasted value. Debited means deducted. Therefore, individual creditors account balance decreased by difference value 900. If individual creditors account balance decrease, therefore list balance also decrease. Therefore, closing balance, this balance decrease. Therefore, should be deduct. Difference value equal 900. This is the transaction number fifth one. Side is okay. Cash paid for creditors should be debit, but incorrect value. Debited overcast value. Debited means deducted. Therefore, effect for Amal account balance decrease. Therefore, list balance decrease. Therefore, closing balance decrease. Therefore, should be deduct. Now take the control account balance. Correct balance. Adjusted control account balance. Credit side total amount equal 14,500. Take that value debit side. Then 14,500 from that value deduct 400 as well as 660. Therefore, adjusted control account balance equal 13,440. Balance carried on from debit side to credit side, and that value should be included as a balance as per adjusted creditor control account 13,440. Then take total addition. Total addition equals 600 plus 600. Therefore, here answer equal 14,040. Then total deduction equal 900. Total deduction equal 900 within brackets. Then take the answer 13,140 If it is correct, this value should be equal creditor list balance. Think about, this is not error correction. This is a reconciliation. We are going to provide reason for difference of control account balance and list balance. But errors occur in the general ledger should be adjusted control accounts. Sometimes they ask statement of creditors, correction of credit list. If they ask correction of credit list, this one it opposite side. This one it opposite side. But this is a reconciliation. This is the adjusted control accounts. Think about why we have to prepare reconciliation. Then think how to prepare adjusted control account and how to include information in the reconciliation statement.